I'm Jesse Hamilton, Chief Financial Officer at Wilson Asset Management. I'm joined here today with Geoff Wilson to talk 100 years of listed investment companies. Welcome, Geoff.
Thank you, Jesse.
So, Geoff, we're coming up to 100 years with listed investment companies, and over the last 25 years, you've played an instrumental role in the industry. Now, we've gone through big periods of growth, and we've had some golden decades of listed investment companies. More recently, we've seen some consolidation. So the sector's sitting at around $47.5 billion at the moment. What are the most notable changes you've seen over the past 25 years?
I mean, just in terms of putting, as in Wilson Asset Management, into context, so nearly, 23, 24 years ago, floated WAM Capital, our first listed investment company, and we raised $21.5 million. So back then, we weren't very significant in the listed investment company space.
Yeah.
Obviously now, we've got 130,000 shareholders, over $5 billion, 8 listed investment companies, the 2 future generation entities that we established. So really broadly 10% of the listed investment company sector we're responsible for. So the last bit, we've been well and truly involved in the growth. Over that 100-year period, there has been a lot of cycles, and to me, I think it's evolved as normal businesses do evolve. There's been, I remember back in the, sort of when I started in the industry in the early 80s, a lot of the more traditional listed investment companies were around. And the AFICs, the Argos, the Miltons, and there's been quite a bit of consolidation there. Like Argo had a couple of other entities that it managed.
And Milton merging with Solpat.
Exactly, that's right. So there has been sort of as younger ones grow, there's been consolidation over the period. The evolution, broadly over the last sort of period has been domestic equities, Australian equities, a lot of growth in global equities, more new asset classes have turned up. Alternate assets, which we've got into, we're very excited about the investment opportunity there. Also, there's been fixed interest, where when you look at the US, nearly half of the closed-end funds, they call them over there, are fixed interest plays, and they've been there for the long time. And go back 10 years ago, Australia had virtually no fixed interest plays. So now it's got more fixed interest plays. So it'll continue to grow and evolve. And to me, it's in a very healthy space. Has been good, it's good consolidation, and now it's probably getting close to another period of growth. And as you said, there has been golden periods. When I started in the industry, the big growth area was the managed funds area, and that's effectively, in those days, they paid financial planners to put the money with those managed funds. And listed investment companies have always been very frugal, run them efficiently, but they're traded on the stock market. So it's a closed-end pool of capital. You buy a share in, and no one got paid. None of the financial planners got paid to invest in those. So when they levelled the playing field, what was it, 10 odd years ago, then since then there's been a lot more people, and financial planners mainly, have looked at the listed investment company space, and a lot of high net worth individuals have actually gone from the unit trust space to the listed investment company space. Why is that? Is they like the growing stream of fully franked dividends, the security of that. There's a lot of structural issues that are positive for listed investment companies. And to me, the holy grail of listed investment companies is, they'll trade at a discount to NTA or a premium to NTA, where a unit trust or exchange traded fund, you're getting in and out at NTA. A lot of people see that as a strength of those. I actually see the strength of the listed investment companies is the fact that the stock market decides what the price is, and so you can do your research. You can find a company who's got a dollar of assets, and you can buy it at 80 cents. So if it goes back to $1, you make 25% on your money, and that dollar is giving you the same exposure of the ETF or the managed fund. So you're getting the same performance, and you're really getting it supercharged. So to me, that's that's the holy grail of listed investment companies, which some people see it as a weakness.
Yeah, and on the other side, you can also, looking to sell, you can sell it at a premium to its underlying asset backing.
Yes, if it's trading there, yeah. And obviously the frustrating thing is you buy something at a discount and it stays at a discount or goes to a bigger discount. If you do your homework and your research, then you can sort of potentially add that additional layer of supercharging your performance.
So at Wilson Asset Management, we're passionate about advocating on behalf of retail investors. Why do you think this is so important when you're managing a listed investment company?
You treat people, first of all, with respect, whether it's whoever the person is. Obviously, like we're managing money on shareholders' behalf. So in theory, they're employing us. So you treat your employer with more respect, and they're our shareholders, and we understand that, and we're only here because they allow us to do this. So to me, we've always had a close relationship with our shareholders. Try to meet them as regularly as we can on our 6-monthly or 12-monthly road shows. Meet them in person. Build relationships up. Understanding that we're working on their behalf. In terms of our business, we've looked at it from the early days, like why was the business set up? It was really to make a difference. Make a difference in terms of managing money on shareholders' behalf. Make a difference with those shareholders that sort of entrusted us with their money to stand up for them. And as we've grown to over $5 billion and over 130,000 shareholders, a lot of those shareholders, retail investors, really salt of the earth, mum and dad investors, and we're perceived as an institution. So we have carry a little bit more weight in the media, and with government, and we can stand up for what we believe is right, and stand up for them.
Definitely. So after founding Wilson Asset Management almost 25 years ago, almost 5 decades in markets, what are some of the key lessons you've learnt over this time?
Well, that is one of the good things about getting older. I was always good with patience, but that's one of the big things. And investing is a long game, and you have to live through the cycles. You've got to be prepared for the good and the bad. It's important to take a long-term view. To have that patience. One of the hard things for a lot of people is to work against your emotions. So, when the market's falling, the normal emotion is to worry and get scared. But I think anyone in the investment game, when the market's falling, we tend to get pretty excited because we know there's going to be some phenomenal opportunities.
So now for the next 100 years. So what would your stock pick be if you had to invest in a listed investment company for the next 100 years? Well,
okay, I'll be 164. So Dad made it to 87. So I was thinking I'm probably mid-90s I'll make it. So I don't know if I'll see it out. But with technology, who knows? Maybe they cryovac me and bring me back in 164 years and I can answer that. No, we can assess how they all went. Well, again, the great thing about listed investment companies, and obviously, Wilson Asset Management, I've got enormous respect for all the people that manage the money. People think I manage the money. I'm the old guy that sort of makes a lot of the noise. But in terms of the investment team, they're the guys that are managing the money. And if I can buy sort of something a little cheaply, and get a dollar's worth of exposure for less than $1, then obviously that multiplies your return over time. So I'd actually, and I know, this is obviously significant bias. I'll be picking 3 WAM listed investment companies, and it's really the three newer ones, and they're the 3 trading at discounts. And the 3 newer ones: WAM Strategic Value, the newest, WAM Alternate Assets, and WAM Global. They're trading at good 10% plus discounts. So you're buying $1 of assets for 90 cents. And so if you get the same return or better than the market over that time, it's going to be supercharged by that discount being removed, and they will go trade at NTA if not a premium, similar to our larger listed investment companies, or our longest operating one, WAM Capital, is currently trading at about a 20% premium. So them trading at discounts to WAM Capital trading at premium, they're so both illogical, but that's the market. And if you can take a long-term view, then I'm pretty excited about those. Well, now, Jesse, you've asked me my stock picks. What about yours? What's your what one stock or multiple stocks are you going to give us to invest in over the next 100 years?
My stock pick is FutureGen Australia, so ASX FGX. But FutureGen Australia, obviously getting access to the best quality asset managers in Australia. They're managing the money for free, so they're not charging management fees or performance fees, and we're able to give 1% of our net assets each year to youth and children at risk charities. So I guess over the next 100 years, getting access to those asset managers and their portfolios and returns, but also making a significant difference in the community. That's my stock pick. Thanks, Geoff, for joining me today to talk about 100 years of listed investment companies. It's been great to talk about all the changes and the growth that we've seen, the opportunities, and hear your stock picks today. So hope you all enjoy the rest of WAM Vault.